Joining me now is Michael Ranking, Senior Market Strategist at the New York Stock Exchange. Michael, welcome. So good to see you.
Hi, thanks for having me.
All right, okay, so trading just kicked off. What are investors going to be looking at most closely during today's session?
Yeah, so we're looking at futures trading higher, or equity markets are now trading higher now that we've opened, kind of driven by two kind of factors, right? The first was that overnight we got strong earnings from Micron, kind of helping to alleviate some of the concerns around the AI complex that kind of have been percolating for the last couple of days. We also, there are some stories that OpenAI is working on another round of funding, right? And that came on the heels of some reports yesterday that there were some funding issues, kind of at a data center, which really kind of weighed on that sector. And then this morning we had the inflation data, the long-delayed inflation data from the BLS was released. But I'll give you my skeptical side eye there in that, right, the data came in better than expected, showing a decline from about 3% to 2.6%. Which has kind of helped equity markets move higher. But if you look at the data, right, the table that's normally released within that was almost completely blank, right? We did the BLS didn't actually collect any of the data in October, right? So you're seeing kind of equity markets respond positively, a little bit of a move lower in Treasury yields. But if you look at like the probabilities, kind of for rate cut expectations looking into next year, they're only shifting like very, very slightly.
All right, what do you think? Do you think that this report is going to have an impact on what happens at the next Fed meeting next year?
So I don't think it impacts January, right? And I think if you look back, if you listen to what Fed Chair Powell said last week, right? He said that he expected there to be large distortions in this week's data. Now the employment data, kind of earlier this week actually looked pristine relative to kind of today's BLS CPI report, right? And it showed kind of the labor market was kind of holding up. We did see an increase in the unemployment rate. That was partially driven by the fact that we didn't have the household survey collection, but it was also that we saw an increase in labor force participation. So that's not necessarily a bad thing, right? And then today's inflation data, if we see the January data look similar and the February data look similar, right? That's very positive. It's a very positive development, but I'm just not so sure that this data is gonna hold up over the next month.
Are we going to see the January report on time? Because I know we're kind of backed up because of the government shutdown. Yeah,
so we should see both the employment report and the inflation data ahead of the Fed's next rate decision, right? So we should see all of that data. Markets are right now pricing in just slightly higher than a 25% chance of a rate cut at that meeting.
And between Tuesday's jobs report and the data that came out today for jobless claims, what is your take on the state of the labor market?
Yeah, I mean, so I think like the labor market, it continues to moderate, right? It's kind of a low hiring, kind of low firing sort of environment, right? Kind of along the lines of this kind of K-shaped economy that we keep talking about. We continue to see some moderation. There was a big decline in federal jobs in the October reading in the labor market report, but the private sector hiring kind of held, kind of reasonably positive, kind of a little bit over 50,000 jobs in both October and November, right? So it's telling you that you're not seeing kind of a lot of demand, right? But if we do start to see the economy reaccelerate heading into 2026, right, and some of the policies that have been put in place from the One Big Beautiful Bill, right, we could start to see kind of that environment improve as we move into next year.
What state do you think the labor market is in right now compared to other times?
I mean, I think it's just we're it's a moderating kind of labor market. It's still reasonably resilient, right? And hopefully we do start to see some improvement into next year.
And what other storylines are you following as we ramp up into 2026?
Yeah, so the big story right now outside of kind of monetary policy within the markets has been kind of the AI trade, which has started to fracture a little bit over the last couple months. But what that has done is started to add to some of the rotational activity, right, that we're starting to see. So we're started to see kind of the mix of monetary policy moving in a positive direction, the expectation that fiscal policy will have positive effects on the economy into next year is started to drive kind of performance in areas of the market that have underperformed throughout the year. Now that's like something that you do tend to see in the December time period, this idea of kind of the mean reversion trades and into the start of next year, right? But it's driving outperformance in kind of value sectors relative to growth, right? You're seeing kind of small caps and mid caps outperforming large caps, right? And we'll see, that's kind of the big question heading into next year, is if that will continue or if this is just another one of these cases where you have the fits and starts of this kind of rotation happening that ultimately die out.
What do you think will happen with AI moving forward? Do you think we'll continue to see that rotation out?
Look, I think there's some skepticism. Things got had gotten kind of pretty euphoric, right, over the last couple months, and you saw kind of on a day-to-day basis you had these continued kind of partnership and deal announcements, right, and spending announcements. Now markets are kind of looking, it's not the rising tide lifting all boats at this point, right? Markets are really looking for kind of winners and losers, right? That AI trade has evolved over the last couple of years. I think that evolution will continue as we head into next year, right? And I think markets are really going to try to focus on companies that are implementing the technology and showing that that's helping to kind of drive productivity and earnings at the company level.
All right, Michael Ranking, Senior Market Strategist at the New York Stock Exchange. Thank you for joining us.
Thanks for having me.